SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz. The date is January 4th, 2016. Happy New Year to all of you out there. And Happy New Year to you too, Ned Schmidt. Hey, as predicted in the Value View Gold report, it looks like the big market boom is over, or has been over for quite a while. And hey, Happy New Year to you there, Ned. It's always great to have you on.
It's great to be here, and Happy New Year to you. I mean, what better way for me to start the year than stocks to be down and gold to be up? I mean, the first day of the year is an excellent predictor of what's going to be happening this year, and I'm just excited to be. 2016 is going to be a good year for us.
Yep.
The thing is, people should have been expecting what's been unfolding, not just on the first day of 2016, but it's been unfolding for months. The gold stocks have been outperforming since July. The GDXJ, which is the small stocks, bottomed in July. The GDX bottomed in September. And since the end of July, the gold stocks have been outperforming the U.S. stock market, outperforming the S&P 500, outperforming the Dow, and clearly they were up earlier this morning. So the paper world, as represented by U.S. stocks, is starting to come apart. It started coming apart with the end of quantitative easing. The first interest rate increase was a red flag. People should have realized at that point the world was going to change for the U.S. stock market, and it is. And you put behind that all the other stuff that's going on in the world. I mean, all stock markets are in trouble. There is no reason for the U.S. stock market to go up anymore. You add to that the problems between Saudi Arabia and Iran. I mean, gold and silver are set up now in terms of price to do quite well in this year.
Mm-hmm.
The thing that's amazing, though, is the unwillingness of the U.S. investment world. I think they're a lot more rational in Europe because they don't seem to have the love of equities that we have in the States. Chinese traders are just gamblers. But even if you look at today's market, we're looking at it on Monday, that they're not giving up on the stocks. They keep trying. Several times today, they've tried to rally the U.S. stock market. And then you look at silver, there is actually some idiots selling silver today.
Really?
I'm baffled by that.
Uh-huh.
I mean, it's only up 4 cents now. I mean, it's got to be the dumbest traders in the world selling silver at these prices. So what I'm saying by that is that the U.S. investment world today was not a splash of water in their face. To them, it's just an intermittent blip, maybe, between where we are and where they think these wonderful stocks are going. And we got Apple in a bear market. This morning, Netflix traded down into a bear market. There's no acceptance of the deterioration that's going on in U.S. financial assets. And until that happens, it'll still maybe be a struggle for gold and silver. But with the GDX and the GDXJ are telling us that better times are ahead of us. Now, there were 2 dominant themes in 2015. One was the NASDAQ 100 and that group of 4 stocks which generated almost all of the performance in that index.
Mm-hmm.
And the other is the U.S. dollar. Now, this has been going on for 2 years. Somewhere this year, that theme is going to start having a problem. I don't know why. I don't know when. But all I know is the street can't keep an investment theme going like that for 3 years. And this dollar is causing some major problems in trade
Oh,
because
yeah.
it's so unnatural. You can't sell U.S. beef to the world right now. Nobody's buying it. They can go to Brazil, India. They've so crushed the value of the Russian ruble that Russia is going to become the biggest pork exporter in the world because nobody can beat their price. The distortions are getting serious.
Mm-hmm.
What we're seeing is the currency world as it applies to commerce, business, separating into two groups. You got the Chinese yuan trading versus its partners. While the Chinese yuan is down versus the dollar, it's been running steady against its trading partners. So what we're seeing is the Chinese using their yuan produce the dollars, and trade is now taking place in non-dollars. The world of commerce and trade is moving to a non-dollar world. So what was left out here is this dollar is being hung out to dry all by itself. The only people that are in the dollar are currency traders. I don't know how that comes to an end, but it is going to come to an end. I mean, you cannot maintain a bull market forever on leverage, right? I mean, that's the only way you trade currencies.
Mm-hmm.
So, and you add the fact that we've seen the bottom in U.S. inflation. It is rising, it is going up. But the other thing is that I keep reading intelligent people like Jim Grant, who should know better, saying that the Federal Reserve is going to reverse policies. I don't think it is for a couple of reasons, but the big one is the last time we had a monetary event like this rate increase was 1951 in the Treasury Accord of 51. The Treasury and the Federal Reserve on December 8, 1941, started buying all the government debt that could be sold. And that went on for 10 years. And then they changed the policy in 51 because they knew they had to. And that's what Yellen is telling us. So the last time we had an event like this, it was a precursor. First of all, it came after 10 years or more of irresponsible monetary policy, and it kicked off a 30-year increase in interest rates. If that happens again, we're going to decimate U.S. stocks, and the only asset left is going to be silver and gold.
You think that's what's going to happen, huh? You really think, but the economy being so sensitive, what's going to happen to raising interest rates while the rest of the world is cutting them?
Well, the issue relates to two sectors, really, autos and housing. And housing, it's recovered, but housing isn't exciting. Autos have a problem that's going to hit regardless of whatever happens to interest rates because of the way they're making car loans today.
Oh,
I mean,
yeah.
we make car loans. Anybody can get a car loan and with no credit. I mean, they're just giving cars away.
If you can fog a mirror or you have a pulse, you too can get a car loan.
That's right. And if you don't have a W-2, we'll make one up for you.
Why not?
And that's the way it is. One of the things the dollar appreciation has done, the dollar has probably reduced our economic growth by at least 0.5% per year. The overvaluation of the dollar is you cannot hardly sell U.S. goods outside this country anymore. They're just priced out of the market. Well, then let's back up to the elephant in the room we've been ignoring, and that's the price of oil. The price of oil is going to be higher at the end of this year than it is today. Now, I can't say how much, and it would be a small estimate or not. But oil is probably made its bottom when it broke $35. While it may test that number in this quarter, by the end of the year, oil prices are going to be higher. So that is going to somewhere go into the pricing equation because we have repriced a lot of goods to zero. I mean, no cost for oil, $2 a gallon.
Mm-hmm.
So I can't see oil going to $50, but I can see where we'll see that the trend is now back up at a very slow pace. So we have to factor that into the inflation. inflation numbers have all been pared down by low oil prices. I mean, we've been going down for several years. And so, yeah, that in the equation. And that's not positive for paper equities. That's positive for gold and silver.
Yeah. So you think oil's definitely hit its low? You think we hit the bottom in oil and natural gas too?
Natural gas, I'm not confident on.
Yeah.
But oil, when we broke 35, I got down to about 34.60 or something like that.
Mm-hmm.
That's probably the bottom, because while crude inventories are still high, the second derivative is negative. In other words, what I mean is crude oil inventories were up 26% from a year ago. Not too long ago, they were up 30% from a year ago. So that pressure is starting to, that inventory pressure is starting to come down, but it's still going to take most of this year for that to happen.
Yeah. Yeah, there's a lot there, and there's still, production is still up, hasn't gone down, even though all these frackers have shut down.
No, and the only place where there's any inventory issue is in gasoline. Gasoline inventories are off considerably. And what we've done is we've shifted the gasoline inventory from the refiners to the consumers. Consumers are carrying around full tanks of gas now, when year and a half ago they were carrying around half a tank of gasoline.
Well,
so
it is interesting because the inventory of crude in the system right now, it's only 1.2 billion barrels worldwide. And when you consider that we consume as a world 95 million barrels a day, it's only 12 days worth of inventory. So you can get hung up on that number. It's not as meaningful as it might seem, is it?
You're correct. But the problem is traders don't pay it. They pay attention to the headline number. They don't pay attention to the details. And that's what we're dealing with right now.
Mm. Yep. So how much the world's awash, but it's only awash in like less than a month's worth of inventory when you get down to it.
That's right. That's right.
Not really that much.
That's a correct way to look at it. But traders, again, all they do is look at the headline numbers. There's no group has less knowledge of what they trade than traders. It just sometimes it just baffles me.
Well, all they care about, they just care about technical stuff. There's no relation to fundamentals or anything else. It's simply a matter of hey, everyone else is doing it. The liquidity is low, so prices going up. They're just a bunch of people following their tails around, mostly. That's right.
Yeah. And that ain't going to change. It's been that way for so long.
Yeah. Yeah, they don't. I mean, I had a close friend who was a trader, and he didn't care what he traded. As long as there was volatility and the potential to make money, that's all that mattered to him.
Yeah.
He could have been trading knitting needles. Didn't matter.
You see that regularly on these companies that are bankrupt. They'll even send out public relations messages. Do not trade our stock. It's worthless.
Yeah.
And people keep trading it.
Mm-hmm. Yeah, it's a little ironic, but they inhabit a different universe than the rest of us, I think.
That's true. That's true.
They really do. So, hey, get into agricultural commodities, and you're one of the keenest observers of that situation. What are we looking like there?
Well, it's kind of interesting. In this table I put out this weekend, the number 2 item for performance was U.S. cash corn. If you'd end of July bought a bushel of cash corn, you would have earned about 1%. Which is far better than you would have done in the U.S. stock market. Certainly better than you would have done in Apple. Apple was off 13%. And I mention that because in June of last year, I was at a business luncheon, and I was sitting with a group of young portfolio managers, guys in their 20s.
Oh, that must have been entertaining.
This is a group you cannot teach anything to. and I told them I would rather own a bushel of corn than Apple stock. And they were just baffled at how I could be so dumb. But, they haven't made enough mistakes in their life. People like you and me have made so many mistakes in our lives that we have finally started to learn from them. And anyhow, cash corn is important, U.S. cash corn, because this is the commodity that the Wall Street thinks it understands. It doesn't, but it thinks it does.
Yeah.
So the point is, U.S. corn has put in a massive base, and production is going to be down again this year. And so it's kind of like working like you were just talking about oil. If you look at the headline number, there's a lot of corn. If you look at it, how much we consume per day in this world, it don't look as good. But the big problem we've got in agriculture right now is everybody is looking at dollar-denominated indices. My index is a dollar-denominated index. And that dollar is so overvalued that it makes commodity prices in the U.S. look cheap, look like they're down. When if we go anywhere else in the world, commodity prices, agricultural commodity prices, are at highs. Malaysian palm oil.
Like gold and silver. Same with gold and silver.
I mean, a Canadian investor in gold has been doing fine. But like Malaysian palm oil, which is the largest largest vegetable oil in the world, has been trading at a high in Malaysia because the Chinese and Indians are buying it. They're going to make biodiesel out of it. And we're seeing that in a lot of places. Canadian canola, anything that's produced outside this country. But the dollar is so high it makes them look cheap. The thing is, though, that if we look at the individual commodities, meats, we can't talk about meats right now, is that they're all building these giant bases that go back a year or more. And so we're set up again as a world for another agricultural commodity cycle to start. And it's going to start this year. It's been due to start this year for 3 years. So,
like so many other things.
If you went 3 years ago, you could have sat down and said 2016 is when it should bottom, because it takes that long and the cycles are long. So the stocks have were brutalized in the second half of 2015. But I think here in the first quarter is going to be the worst of news for them. And it's going to get better for all the agricultural stocks all year. And, of course, we got the big merger with Monsanto. I mean, Syngenta and somebody, I think Syngenta is going to end up with Monsanto. We got the big Dow-DuPont merger, which is going to spin off an agricultural company that's everybody's going to buy. I mean, if you're anybody that's in that sector, you got to buy whatever the company is that comes out of Dow and DuPont. So that's of interest right now.
Mm-hmm. Yeah, it makes a lot of sense. And those agricultural companies are hot. Hey, did you happen to catch that one in China that they lost all their records after they were subpoenaed? They got hijacked in a truck hijacking, and they weren't able to. Did you happen to catch that? That was quite hysterical.
Well, I don't know if it's the same one. Is what I read about another one, and I just don't know if it's China Animal Health.
Yeah, that's the one. Yeah.
Yeah, this truck just suddenly disappeared with all
those records, all those incriminating records, and that are irreplaceable too, Ned. Don't forget.
Yeah, if they're in, and they were in like a white van or something like that, like on a cartoon TV show.
Oh God! It just you can't make this stuff up. You can't make it up.
No.
Oh my God! And what are they going to do? It's like my dog ate my homework. It's
the same thing.
Nothing I can do about it. Sorry.
Eli Lilly owns 20% of that company.
20% of nothing, huh?
Well, up until this past year, I mean, the problem with their financial records has been going on since 2014. And they couldn't find an auditor that would even touch their records.
Yeah, well, That's the problem with Chinese accounting. I mean, you know that U.S. accounting is fraudulent, but in its fraudulence, it adheres to certain standards. It abuses them, but it's pure fraud, is what I mean to say. But Chinese don't have any standards to adhere to, and it's just one fraud factory after another.
And then you throw in ineptness. They got this monstrous ineptness factor.
Yeah. Oh, that was funny.
They've been accountants for 6 weeks.
Yeah. Yeah, nothing like GAAP Chinese style. Like GAAP is not noodles. Yeah, well, just like in Chinese cuisine, you've got Szechuan, you've got Hunan, you got Cantonese. With GAAP, I think it got different flavors of Gap, right? It's just funny.
Oh, well, you got to have some humor in this world.
Yeah, well, there's a lot to go around. Just look at Chinese financial statements. As long as you didn't invest, you won't have tears in your eyes. The tears in your eyes, as long as you don't have money in there, the tears in your eyes will be from laughter. But geez.
I wonder how much money the accounting profession has cost investors over the years.
Probably a lot more than it saved. I mean, when was the last time an accounting firm uncovered a fraud?
I don't think they ever do until it's revealed in the court documents.
Yeah. Like the SEC, right? Like the SEC. When did they uncover a fraud? It's just not their job.
I don't know what their job is, to be honest with you.
It's to get the filings. You just file, you can tell them everything. As long as you disclose everything, you're safe. That you were an armed bank robber and spent 20 years in jail. It doesn't matter as long as you admit it and you weren't convicted of a prior securities fraud. Then you could have problems.
Well, yeah, if you've actually been convicted, but the standard from the SEC has never been that you were qualified.
No, because
it's never been a requirement.
Yeah, it's not there to protect you. That's the first thing you have to understand. It's there to enforce rules about disclosure. Anything else is your problem. And then after you've lost all your money, they might cite the company, but I wouldn't count on it.
Don't bet on it.
No. So anyway, Ned, your websites, your publications, where do we go?
The gold can be found at valueviewgoldreport.com, and ag is at agrifoodvalueview.com.
All right. And if you can't remember those, just look in the show notes on Financial Survival Network. The links will be there. We will talk with you again soon, Ned. It's interesting to get your perspective on things. This will be an interesting year, if nothing less.
All right. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.